We're a company focused very much on moving goods through our ports, focused on the import-export supply chain. Initially started 10 years ago. The management of QUBE, most of the management worked together in a prior life at Patrick's before the hostile toll takeover at Patrick, and decided to go off and do something else. And at the same time, DP World acquired P&O Ports. We came back together, formed a company which is QUBE today, to invest in the import-export supply chains in Australia. We initially bought the container logistics activities of DP World, our logistics division, very much containerised import-exports plus rail to port, and we bought into the automotive and general stevedoring part of P&O, which is our bulk ports and bulk division, automotive imports, bulk resource exports, and a mixture of commodities. So a strategy to develop those two businesses. We were initially acquired by assembling strategic assets, strategic properties around the country, sometimes in ports, sometimes out of ports, in the context of intermodal terminals in New South Wales in particular, and really focused on diversifying the product range that we're offering. So in the results sheet, you can see segmentation of the two divisions by revenue, right across imports, exports, and that was a deliberate strategy to, if you like, a natural hedge for QUBE going forward with movements in the Australian dollar as imports drop, exports gain and grow, etc. And so it's a strategy around, as I said, diversification of products in that import-export supply chain, but very much focused on inefficiencies in the supply chain. How can we invest, whether it's be in facilities, whether it be in equipment, whether it be in technologies, to provide an integrated solution from port to the ultimate customer, or, for example, from mine to port and onto a ship. And so we service a lot of the well-known companies in Australia, from the Kmarts and the Woolworths to Sandfire Resources Exports, the Iluka on mineral sands, moving product from mine to port. And so the results for us, FY16, pretty much in line with expectation. Our logistics division revenues were down, essentially lower volumes, droughts in southern Queensland, northern New South Wales that stopped a lot of grain exports out of New South Wales, commodity-related exports. The decline in the mining and oil and gas space, which were lower volumes in Fisherman Islands in Brisbane and Fremantle in the west, the two sort of mining states, but no major loss of any major contracts to a competitor in either divisions. Generally in logistics division, existing customer revenues were lower or volumes were lower. But the pleasing part about our logistics division was we continue to improve margins. The margins and the earnings on our business are continuing to improve on the back of consolidation of activities in site. Our objective in logistics is to touch that import container when it leaves the port, move it through to the importer, relocate that empty container back to a facility, hopefully a QUBE facility, then it'd have it packed with an export and move that export commodity back to the port. And so the logistics division we were extremely pleased with. Ports and bulk division was a significant drop in earnings, which we had indicated to the market well in advance. There were 4 major contracts, 3 of which finished at the end of FY15. They were resource-based projects that stopped and finished, and probably in our ports and bulk a little bit softer than what the market expected, but not too bad. So overall, from our operating divisions, FY16 was for us a reasonable year, a reasonably solid year, given the tough economic environment we're operating in and the pressures that are under both sides of our business in relation to customer pressure on pricing and services and the like. Probably the 2 big call-outs for the year really was finally the 50% acquisition of the Patrick container terminals. For us, that starts that container logistic chain or finishes it at the ports through the container terminals. And it was very important for us to grow our business into that container stevedoring business. So the 50-50 joint venture with Brookfield to acquire the Patrick container terminal business. a great business in its own right. In our view, the Patrick's is the best positioned container terminal business in Australia. Yes, it has third stevedore competition coming in. It's already been in for a couple of years in Sydney and Brisbane. That hasn't had much impact. Melbourne has its third container terminal coming next year, but our view is that's quite some time between those third terminals gaining significant market share. The one in Melbourne has a complete new automation platform, first of the world. It's bringing together different parts of automation into one terminal, and we've had significant experience with automation in the Brisbane and Botany terminal, and it takes years to perfect that automation. So our view is it's going to be a slow start for the competing third terminals. That aside, we're investing in this for the long run. Patrick's is a great business. It's got the best sites in the container terminals around Australia. And in Sydney and Brisbane, it's got its lowest unit cost with automation that's already in place. So a very important acquisition, not only in its own right, but in our view, how it can add value and improvements into that import-export supply chain. So a very strong positive for us. The second big issue for us is Moorebank and moving ahead with this huge intermodal project in Sydney and our agreement with Horizon to buy their minority interest out of not only the land at Moorebank, where we jointly owned 83 hectares of land, but out of the project that we have secured with the Commonwealth to build a huge intermodal terminal on our 83 hectares of land and the Commonwealth's 160 hectares of land. So 240 hectares of land for a huge logistics park. Moorebank Logistics Park it will be called, and the concept plan is to build 850,000 square metres of warehousing connected right at the M5, the M7 orbital in Sydney, and direct rail from Port Botany in and out of Moorebank, plus a new interstate rail terminal that will connect Moorebank to Melbourne and Moorebank to Brisbane in the future on that freight link. So two big projects, if you like, in FY16 for us, transformational year for QUBE. FY17, our view is that the core two operating divisions will continue to grow earnings. Patrick, we will obviously transition. We only have Patrick for just over 10 months of the financial year. The new management team has gone in. They're working through that whole transition into a new separate entity for the Patrick container terminals, effectively demerging the Patrick container terminals from the old Asciano business. And on Moorebank, very much waiting. We should have what we call financial close within the next month, which is really day one of the project. All the agreements are in place with the Commonwealth. Both parties have been working through a number of conditions precedent to financial close and therefore day one of the project.